You think that next $50,000 raise will finally make you richer. You've spent the last 3 years dreaming about this moment. You've calculated the math on the back of napkins. You've told yourself that once that number hits the screen, the weight on your chest, that constant, low-grade hum of financial anxiety will finally evaporate. You think you're winning the game. You're wrong. Earning $50,000 more wasn't the breakthrough you think it was. It wasn't the reward for your late nights or the prize for your loyalty. It was the trap they built years ago. It's a carrot on a stick that's been lengthened, just as you started to pick up speed. And once you see the full chain reaction, once you look past the digits on your banking app and see the machinery moving behind the curtain, you can't pretend the system was broken by accident. It's working perfectly. It's just not working for you. Think about the ritual. Your direct deposit lands at midnight. In the silence of your bedroom, the blue light of your phone illuminates your face. The number looks bigger than last month. Substantially bigger. You refresh the banking app again, just to be sure it isn't a glitch. For a fleeting 30 seconds, you feel a sense of triumph. You feel like you've finally gained ground. But then, the phantom hands start reaching into the pot. Groceries already ate half the game before you even logged off. You remember the price of eggs and milk from 3 years ago, and then you look at the receipt from this afternoon. Rent demands another slice before dawn hits. Your landlord didn't even wait for the news of your promotion. The market adjustment letter was already sitting in your inbox, timed with surgical precision. Gas prices climb while you sleep through the night, tethered to global shifts you have no say in. The utility bill hits automatic and takes more than it did last quarter. Not because you left the lights on, but because the delivery fees and infrastructure surcharges have quietly doubled. You stare at the screen in the dark. The math doesn't add up. You're making life-changing money, yet the life you're living feels exactly as precarious as it did when you were making half as much. The experts on every channel keep talking louder, using terms like transitory and supply chain disruptions. They offer tips on how to save money by cutting out your morning coffee or switching to a cheaper brand of cereal. But nobody picks up the real explanation line. Nobody wants to talk about the fact that the floor is being raised faster than you can climb the ladder. The people paid to prevent this exact feeling, the economists, the policymakers, the institutional guardians, were the same ones swearing it could never happen to someone like you. They told you that if you worked hard, gained skills, and climbed the corporate hierarchy, you would achieve financial freedom. The official story was clean, almost too clean. When people started noticing their bank accounts draining despite higher wages, the narrative shifted. They said it was your lifestyle choices catching up. They coined terms like lifestyle creep to make you feel guilty for buying a nicer pair of shoes or taking a modest vacation. They blamed unpredictable spending spikes from daily life. They called it a perfect storm of personal decisions nobody could control. They wanted you to believe that the reason you're struggling is because you're bad at managing your success. They wanted you to believe that nobody could have seen your money vanishing like this in real time. But that's the first big lie. The truth is documented. It's archived. It's dated. While the pundits were blaming your Starbucks habit, 17 different analysts published detailed warnings about the impending price surge years earlier. They saw the expansion of the money supply. They saw the tightening of the housing market. They saw the consolidation of corporate power. 2 separate congressional hearings raised red flags on wage erosion in plain sight. They sat in mahogany road rooms and admitted that while the nominal wages were going up, the real buying power was being hollowed out like an old tree. And then there's a smoking gun. One internal memo, circulated within a major financial institution and never made public, said exactly what was about to happen to your real buying power. It was written 3 years before that $50,000 raise even hit your account. The memo existed in the files. The warning was documented and circulated. The question was never, did they know the math? They are the best mathematicians on the planet. They have supercomputers dedicated to predicting the movement of a single cent across the globe. The question was, who decided to let it happen anyway while you chased the number? That's where the official story stops making mathematical sense. One number never got explained in any interview. One number was conspicuously absent from the flashy PowerPoint decks at the Federal Reserve and the quarterly earnings calls on Wall Street. And it's the only number that matters when the deposit clears, the velocity of your vanishing wealth. Here's what nobody bothered to print in the headlines. Why did every single cost explode right before your pay bump landed? Was it a coincidence that as soon as the average salary in your sector jumped, the average rent in your zip code jumped by the exact same percentage? We have to go to the next layer to find the answer. The people setting the prices, the CEOs of the grocery conglomerates, the heads of the real estate investment trusts, the energy magnates weren't paid to keep things affordable for families. That's a fairy tale we tell children about the free market. In reality, they were paid to do the exact opposite. They were paid to push prices higher every single quarter without fail. If they didn't, their stock price would stall, their board would fire them, and their value would disappear. The system is incentivized to extract the maximum amount of juice from the lemon. And you are the lemon. The warning came about the slow erosion eating your gains. It wasn't a secret. It was documented in reports sent to every level of power. It was distributed to every level that mattered. The people who write the tax laws, the people who set interest rates, the people who approve the mergers that kill competition. It was ignored at every level because the incentives pointed the other way. If you're a politician, a booming economy looks good on a re-election flyer, even if that boom is built on the back of massive debt and currency devaluation. If you're a bank, more expensive houses mean bigger loans and more interest. If you're a corporation, higher prices mean record-breaking profits. This wasn't chaos breaking a healthy budget you controlled. This wasn't some oops moment in history. This was pressure that had been building for decades in the background, quietly compounding year after year, legally structured into every policy decision, with full institutional support from the top down. They printed extra dollars to fix their problems. They bailed out the banks in 2008. They flooded the system with cash during the pandemic. And they propped up failing industries with stimulus that never quite reached the person working a 9-to-5. And every time they added a zero to the balance sheet of the elite, they took a fraction of a cent out of the dollar in your pocket. Your raise bought less because of it the moment it cleared. In fact, it bought less the moment it was conceived. Think of the economy like a massive aquarium. For a decade, the people at the top have been filling the tank with invisible water, excess currency, cheap debt, and artificial inflation. At first, you didn't notice. You were swimming fine. But eventually, the water level got so high that you started to drown. And then, the people who held the hose had the audacity to complain about the leaks that soaked you first. They blamed you for not being a better swimmer. But we haven't even reached the part where it gets actually insane. What happened next didn't just affect your paycheck on paper. It wasn't just a math problem. It was a psychological war. It affected your rent payment that kept climbing anyway, even when the building was 40 years old and falling apart. It affected your grocery budget that shrank in real terms, where you found yourself buying the store brand of things you used to love, feeling a strange, quiet shame in the checkout line. It affected your entire sense of security in ways you felt every month. You started to realize that you couldn't work your way out of this. If you worked 10% harder, the cost went up 12%. If you got a 20% raise, the barrier to entry for a home went up 30%. You were on a treadmill that was slowly accelerating, and you were starting to lose your breath. And all of this was still just the setup for the bigger picture. Your higher earnings needed more taxes to cover the gap they created. This is the bracket creep nobody warns you about. You get that $50,000 raise, and suddenly you're in a new tax tier. The government takes a larger percentage of your total times income, not just the new part. You're richer, according to the IRS. But after the tax hit and the cost of living adjustment, your take-home power is actually lower than it was when you were poorer. The government couldn't stop the spending spiral once it started. They are addicted to the debt. And the corporations nobody was watching had control over both sides of the equation. They controlled your wages as your employer, and they controlled your expenses as your provider. They saw your raise as a revenue opportunity for them. These corporations linked straight to the daily costs of 50 million families chasing raises. They had data points you couldn't imagine. They knew exactly how much more you were making before you even told your spouse. They adjusted their algorithms. They optimized their dynamic pricing. Who had no idea any of this existed behind the scenes? You. You were too busy working the hours required to earn the raise in the first place. You were too tired to read the white papers on monetary policy. You trusted that the game was fair. Nobody knew how exposed their finances were until it was too late to fix it quietly. Your raise was called a success by the same voices every quarter. The media celebrated the strong labor market. Your boss gave you a pat on the back and a shiny new title. But it was not the win they sold you. The pay increase, designed to reduce money stress, was the same one that amplified your debt load overnight. Think about it. When you make more money, what does the bank do? They offer you a bigger credit limit. They offer you a pre-approved mortgage for a house that costs 6 times your new salary. They encourage you to leverage your new income. So you buy the house, you buy the car, you take the loan. And suddenly, you aren't just working for yourself anymore. You are working for the bank. You've traded your $50,000 raise for a $100,000 increase in your total debt. You are more successful on paper, but you are more enslaved to the system than ever before. This was legal under every rule they wrote, all of it structured that way on purpose. Some economists call it economic progress, the rising tide that lifts all boats. They say that as long as the numbers are going up, everyone is winning eventually. They point to the wealth in the stock market and tell you to be patient. Others, the ones who aren't on the payroll of a think tank, call it what it actually is: the largest upward wealth transfer in modern history, disguised as opportunity. It is a vacuum cleaner designed to suck the productivity out of the middle class and deposit it into the vaults of the top 0.1%. Every time you run faster, the vacuum sucks harder. Purchasing power vanished overnight once the raise hit. It was a soft theft. They didn't have to break into your house. They just changed the value of what was in your wallet while you were sleeping. And then the wind changed. Lenders stopped offering fair terms on the loans you still needed. The credit system, the engine underneath your lifestyle, froze in place. It didn't just slow down for a breather. It froze solid when you needed it most. Just as you reached that higher level of income, the ladder was pulled up. Interest rates spiked, making that new mortgage you were eyeing impossible. The easy money disappeared, leaving you holding the bag on the expenses you'd already committed to. Somewhere in the middle of all this, real people started losing real things they counted on. Homes they thought were finally safe after years of work were suddenly underwater. Savings they counted on for the next emergency, the nest egg they carefully built, were eaten by the invisible moth of inflation. Jobs they held for 20 years that suddenly felt unstable because the cost of labor, that's you, was now too high for the corporate bottom line. If money had a pulse, this is where it flatlined without warning. And then comes the most insulting part of the story. When the system finally choked on its own greed, when the invisible water got too high and the tank started to crack, someone handed the defibrillator to the people who caused the arrest in the first place. They called it a bailout. They called it systemic stability. They used your tax dollars, the ones you paid out of your hard-earned raise, to make sure the people who set the trap never had to fall into it. They protected the lenders, not the borrowers. They protected the landlords, not the tenants. They protected the shareholders, not the families. Here's what never gets said clearly enough in any raise announcement or any State of the Economy address. You didn't approve this slow drain on your efforts. You didn't vote on the policies that made it inevitable. You didn't ask for the currency to be devalued or for the housing market to be turned into a casino for institutional investors. Yet, you're still paying for it. You're paying for it with every deposit that feels lighter. You're paying for it with the stress that keeps you up at 2 a.m., wondering why making 6 figures doesn't feel like the movies said it would. The data doesn't lie, even if the experts do. Homeownership rates for people under 40 still haven't recovered from the squeeze. In the 1960s, a single income could buy a house, 2 cars, and a college education. Today, 2 high earners with $50K raises are still struggling to put 20% down on a fixer-upper. Median real wage growth lagged behind costs for 15 years after the last big cycle. That means for a decade and a half, the average person was actually getting times poorer times while their paycheck got times bigger. Debt balances, student loans, credit cards, auto financing tripled in the decade following the raise chase most families joined. We aren't earning our way to freedom. We are borrowing our way to survival. Institutional trust in the economic game dropped and never fully returned to previous levels. And why should it? When you see the referee taking money from the other team, you stop believing in the sport. The bill didn't disappear when the numbers looked better on paper. It just got transferred. It got transferred to longer hours just to stay even. It got transferred to lower real power in every purchase you make. It got transferred to the missed dinners with your kids and the hobbies you gave up because you couldn't justify the expense. The result is a generation that inherited a system they had no part in building or breaking. They are the ones being told to just work harder by the people who bought their first homes for the price of a used Camry. They're the ones being told that their $50K raise is a huge opportunity, while the cost of a hospital visit or a year of daycare consumes the entire increase in one fell swoop. Financial systems don't collapse suddenly in one dramatic headline. That's what the movies get wrong. They don't just explode, they erode. They erode slowly through thousands of tiny policy changes and unseen inflationary pressures. And then they fail all at once when the lies stop working. The sudden part is just when people stop lying about the numbers in front of them. It's when the guy in the mirror realizes that the $150,000 he's making now buys less than the $50,000 his father made in 1985. Most financial disasters aren't about how much you make on paper. They're about what the people managing the money were rewarded to do behind closed doors. They're about the fact that the system values growth over stability and extraction over contribution. Every collapse in history follows the same script once you strip away the noise. The Roman denarius was clipped and debased. The Weimar Republic printed until the paper was worth more than the ink. The modern era just uses digital ledgers and quantitative easing. The numbers change with each cycle. The technology gets flashier, but the logic doesn't bend for anyone chasing the next raise. It wasn't a failure of the system that promised you more. It was the system working exactly as designed. It's a machine for moving wealth from the many to the few. It's just not designed for you or the life you actually live or the future you're trying to build for your children. And what happened in the aftermath, who got paid, who got protected, and who got promoted makes this story significantly more disturbing than the headlines ever admitted. The people who architected the race trap didn't lose their jobs. They got bonuses, they got consulting gigs. They got to write the textbooks that tell the next generation how the free market works. If this raise illusion just hit you in the gut, if you've been staring at your bank account wondering where the extra money went, tell me in the comments which number in your budget disappeared first. Was it the rent, the health insurance, the grocery bill? Let's start talking about the numbers they won't show on the news. Share this with the one person you know who is still waiting on their own $50,000 breakthrough. They need to know what's waiting for them on the other side of that deposit, because the first step to escaping a trap is realizing you're already in it.